big ways, and that we're probably looking at a great next couple of months for the markets overall. So that's what I'm looking forward to on this particular Wednesday. But there are some people who are not having such a great time, and we're going to be talking about one of them. You could probably tell by the thumbnail who we're going to be talking about for a decent chunk of today. We're going to be talking about Meet Kevin, because he has made some crazy changes, not just to his portfolio, but to his YouTube channel as well. And I'm guessing that most of you have heard of him because he is one of the biggest finance YouTubers on YouTube. So we're going to start off looking at some of the charts, but also we're going to very quickly move off of them and on to Kevin, because it is a very interesting story in my opinion. And first, I will say good morning to Kitchener, Silver, Rich M, Auto Codes, Quaid. Good morning, guys. Welcome, everybody. Seen Blind. Good morning. So we're looking at good stuff for the markets. Overall, the markets are moving up, and of course, Sundial is moving up. We had a great move in the after hours yesterday, and we have not sunken from the levels that we pumped up to. So we're potentially looking at a very green day for Sundial. We're going to talk much more about them in the later part of the stream. But right now, we are going to be focusing on this guy right here. Zach says he's never heard of Meet Kevin. I'm sure that can't be true, Zach. So here's Meet Kevin's latest video, right? Ending my channel. And we will throw up a like. Feel free to do the same for this stream if you care to. But in this video, I already watched it. He basically talks about the market and how he thinks it's going to go down, how he thinks that the market cycles that are coming our way aren't looking so good, and he's sticking with his plan to sell everything. In this video, he actually said that he was 99% out of the market, right? 99% cash, and that he's going to consider hedging his positions with some other forms of hedging, right? He's going to maybe enter some emerging markets or do something. He wasn't too specific on what he was going to do. He just said he might hedge his cash position in some way. But his overall vibe is that he thinks the markets are going down at some point now in the next 6 to 12 months, he says. And it's certainly possible, right? He could be right about it. We're going to talk about some of the reasons the markets might move down if we do enter a catastrophic period. But overall, I don't think the markets are going to move down. We're going to talk about why I think that as well. But Kevin seems to be quite convinced of it. And this has been a big sore point for not just his subscribers, right? He has 1.8 million subscribers. A lot of people were upset when he decided to sell all of his stocks and to start shorting the market to some extent. It's also been a big disappointment for some of his friends, right? Some of his friends who are continuing to invest, similar to how they always have. Notably, Andre Geek, Financial Education, Jeremy and Graham Stephan. Those guys, they are not too happy with Kevin's decision either. Now, you can see that I do watch a lot of these millennial money videos, and basically, as of late, they've been doing them without Kevin. Now, Kevin said that he decided to step down voluntarily. He wants to focus on some other things. I've heard that he's working on some big projects. That's what he's talked about in this most recent video. But I did want to address the fact that, he's ending his channel to some extent, right? In this video, he said he's not going to be doing his morning market open or morning market closing live streams anymore. And that's a little disappointing for a lot of people, because a lot of people used to turn to him and used to use him as probably their primary source of financial news, and not necessarily financial advice. In fact, definitely not financial advice, but a lot of people used to use him as that. However, this might not be the real end of Kevin, because we have had other videos from him, most notably on February 1st, where he says why I quit and disabled comments, right? You actually had this video come out from him, and you could see the comments were turned off. This was amid a bunch of hate that he was getting for selling his stocks. But you can see that the very next day, he actually did a stream, right? He did a stream, I believe, where was that video? So he said, why I quit and disabled comments right here. And then the next day, he actually had another stream come out, and the comments were back on, right? He had his comments enabled again. So this might not be the real end of Kevin's channel. He might not really go through with the whole thing. He may decide to continue posting videos, because he has been known to change his mind, and to change his mind pretty quickly. I mean, over the course of a day, he changed his mind about disabling comments. And also, regarding selling his stocks, he changed his mind pretty quickly about that, because he had been, just a couple of days prior to deciding to sell all of his stocks, he had been pretty bullish on the market, right? He was a buy the dip kind of guy. So as of late, he's not been having too great of a time, right? Watching the markets potentially recover. He sold his stocks. Let's see if we can pull up the chart of the SPY right around here when he may have began to sell his stocks. I think, if I'm not mistaken, we'll pull up the 180-day chart. I believe that he was selling them right around here, right? Maybe somewhere in this area, right? He was selling them on the downtrend, and he was probably very happy the following days when he saw the markets make lower lows. But then the markets have started to recover. It looks like we might be having a green day today. We're certainly having a very green pre-market and after hours. And I think that one of the reasons, and he even said it in his stream, why he decided to end this thing, why he decided to end these morning live streams that he would do and channel ending live streams that he would do, is because he said it wasn't good for his health. He said it wasn't good for his psychology, because he didn't want to see these stocks moving up day after day when he thinks that overall the market's going to move down. Now, overall, I think that Kevin probably needs a little bit of guidance. He might need a little bit of help. He might want to talk to somebody. Maybe some of his friends from Millennial Money could come over and talk to him about what's going on, because it is an understandable situation. If he lost a lot of money in the market, which I think he did over the past couple of months when the markets moved down, it's completely understandable to want to sell some of your stocks, right? Especially if you're a multimillionaire like me, Kevin is. He probably lost something to the tune of maybe $10 million overall from his all-time highs to where he might be now. He might have lost $10 million, and I believe his net worth is currently sitting, at least his cash position is sitting around $20 million, I'm pretty sure. But he might have lost maybe $10 million off of that, and it could be a very scary thing to be a multimillionaire and then to have 33% of your net worth just evaporate. So it's completely understandable that he did want to sell some of his stocks when he saw the market moving down. It's just that a lot of his followers were not too huge a fan of that. And good morning, everybody who's getting into the stream. Good morning. Kiwi Girl says, Kevin, the drama queen. He is a little dramatic at times. Adrian, good morning. Donnie, good morning. Jeff, Shadow Girl, good morning, guys. And we're just going to touch on me, Kevin, for a little bit longer, for just another couple of minutes. I did want to talk about my thoughts on his decision to sell, right? Why he sold, as well as if he made the right choice. So in Kevin's circumstance, I think that potentially it might not have been too horrible of a choice for him to sell some of his stocks. I don't think he probably should have sold all of them. That's just my opinion, though. He has to make choices for himself. He obviously knows his own finances better than I do. Maybe he needed the money for some projects that he's been working on. I know that in this video he at least mentioned that there are some projects that he's been working on where potentially people could be investing alongside him. And we'll see what he actually reveals in the future, how much capital he really needed for that. But I do think he made a little bit of a mistake going super cash heavy. And there are a couple of reasons why, right? He was talking about some of the reasons why he decided to do it. And he mentioned inflation. And certainly inflation is a real threat for us. Anyone living in the United States, anyone who has a bunch of dollars is in a situation where they could be worried about inflation, and probably for good reason, right? 80% of US dollars in existence were printed in the last 22 months. But it seems a little bit counterintuitive for Kevin to be worried about inflation and decide to go all in on cash, because typically the thing that suffers most during inflationary periods is cash, right? All these dollars just got added to existence, and inflation rates have actually been going up as of late. In fact, we have the chart right here. We've been seeing fairly large inflation, and so Kevin decides to go heavy on cash instead of stocks that people might decide to pour their money into if they're worried about the dollar losing value. So that's one potential reason why Kevin might not have made the best choice. I mean, it would be understandable, or at least more logical, in my opinion, if he was super worried about inflation and decided to go all in on precious metals and maybe put a little bit into cryptos and probably still keep a little bit of stock in companies, right? Maybe just more value-based stocks than growth stocks like he was primarily. That might make a little bit more sense. But what he's done as so far, where he's just gone to mostly cash, doesn't make too much sense in my opinion. And even if you are really worried about how much money the government has printed in the past, I am not as worried about the market moving down from that as I am the value of the dollar. And the reason is, what are we talking about the dollar moving down in value in terms of, right? Are we talking about it in terms of everyday products? Are we talking about it in terms of gold? Are we talking about it in terms of crypto? Or are we talking about it in terms of stocks? Well, it's probably going to move down in value in terms of all of those things because we have just printed so much money into the system, right? 80% of dollars were printed in the last 22 months, and that cannot go unanswered for, right? Those dollars are already causing big shifts to the upside in inflation. We're already seeing it. If you look at the 10-year chart, inflation is at 10-year highs, and it's scary stuff. If you look at the 25-year chart, we're actually at 25-year highs as well. So inflation is certainly going to be a bit of an issue, but you might be wondering, why are we only seeing, at this time, 7% inflation if we've printed 80% of the dollars in existence? That doesn't seem to make sense. You'd think that we'd see a whole lot more. And one of the suspicions that I have as to why this is actually, it's in a tweet right here from Dan Price. He's a CEO of some company, some payment processing company. And the real part of it that caught my eye was, as a result, since then we've added 33 trillion in wealth into circulation. That's the dollars that we're talking about printing. But 74% went to the richest 10%. And if you think about what that means, it means that most of the money that was made didn't go into the hands of people like you and me. It went into the hands of the top 10%. And what are the top 10% spending their money on? Well, the top 10% already have plenty of money, right? They're in the top 10% already. They've already got probably a very nice house. They've probably got a very nice car. They have the nicest food that they could want. They go out to eat whenever they wish. And so what are they going to spend additional money on? They've already got huge stores of cash. They probably have huge stores of stocks in their portfolios. What are they going to spend all of that money on? Well, they're probably not going to start consuming too much more because they're already consuming everything that they want. They're already eating the best meals. They're already eating as much food as they want. They're not going to start buying more food just because they have more money. If they were, they would have probably become very unhealthy a long time ago if they were that type of person, and probably be in the hospital if they were really scaling up how much food they were eating, how much gas they were consuming to drive their cars and whatnot. If they scaled that up with their income, they already would have been very unhealthy a long time ago and probably not be with us anymore if they were actually going to scale it up to that extent. So when extra cash finds its way into the hands of the top 10%, when all of this extra cash finds its way into their hands, what are they going to spend it on? Well, they're going to spend it on things that there's no limit to how much you can spend. And those kinds of things might be assets like gold. They might be assets like stocks. They might be cryptos, which we've seen move up massively over the past year. In fact, we can take a look at what happened to the price of cryptos. We might have some real crypto believers out there. And look at what happened to cryptos when all of this money got printed. People moved up the price of Bitcoin massively. We saw trillions of dollars flow into the crypto markets overall, and cryptos skyrocketed. So people were obviously putting some of that extra cash in cryptos. They were putting some of it even in gold. You can see gold did move up. Gold moved up fairly dramatically. If you look at the past 2 years, it did move up quite a bit from where it was. And it was a more significant move in gold, actually, than in Bitcoin. Because if you look at the percentage gain from not even the lows of the pandemic, but just from around here to the highs of where gold got to, it was a 31% gain in gold's price. And looking at the largest assets in the world, gold is actually at the top of the list. We can pull it up right here. Gold is the number one most valuable asset in the world at $11.6 trillion. And a 30% gain in gold more than outsizes the entire gain in all of the crypto markets. So gold moved up. Bitcoin moved up. Stocks moved up dramatically. People loved putting their money in stocks. In fact, the S&P from near the lows of the pandemic to where we are now was up 78%, to the highs was up closer to 100%. And people just poured their money into assets because the richest 10% had a ton of extra cash. They had a bunch of money and they weren't about to consume more stuff with it. Now, the rest of that money, some of it did go to people who had less overall wealth in the form of stimulus checks and other government programs. And that's why we're seeing a bit of inflation, but it's not nearly as much inflation as you would expect with all the money that's been printed. That doesn't mean that inflation can't come back to bite us and that inflation isn't still on the rise. We'll probably continue to see a rise in inflation for a while, is my suspicion, as is Kevin's, but I don't think it will be as dramatic and devastating as what people are thinking, because the money that was printed, if you think about it like this, if the government prints $1 $1 zillion, right? More than has ever been put into existence before, and they hand it to one person, right? Maybe say they hand it to Jeff Bezos. And we can take a look at where Jeff Bezos sits on the rankings of the world's wealthiest people. We can see where he sits. He's pretty darn high up there. We'll pull this up. So let's say they give it to Jeff Bezos. Let's say they give him $1 zillion. He blows past Elon Musk. He has millions of trillions of dollars in his bank account. Let's say the government does that. What would actually happen? Would we see massive inflation in terms of how much it costs to get a hamburger at McDonald's? Well, unless Jeff is going to take all of that money and use a ton of it to buy hamburgers at McDonald's, then no, we're not going to see a big increase in the price of McDonald's hamburgers. Unless he uses it to buy a bunch of used cars, we're not going to see a huge increase in the price of used cars. And maybe he'll decide to buy up a bunch of real estate just because he wants the real estate. So we might see a big increase in real estate, but that's the stuff that he's not actually consuming, right? That's an investment. We would probably see a big increase in the price of stocks, because why not buy up a ton of the companies and get ownership when you have zillions of dollars in your bank account? So we would see big inflation in these assets, right? He'd probably buy up a bunch of gold. Why not buy up Bitcoin while he's at it? He'd probably buy up a bunch of that kind of stuff, and not so much the normal stuff that we're tracking in the CPI, because he doesn't need to consume more of it. And it's to a lesser extent that exact kind of situation that I think is going on in the markets overall. Why we're seeing such subdued inflation compared to what people might be expecting when they see the statistic that 80% of dollars were printed in the last 22 months. What they've got to understand is that most of it went to the wealthy, and that's leading to higher asset prices, not necessarily everyday good prices. Some of it, of course, went to people who are less wealthy, and that is why we're seeing an increase at all in inflation, but not nearly as dramatic as what a lot of people were thinking. Now, I used to be in the camp of thinking that a ton of this inflation was going to shoot through the roof, and it still could move up pretty dramatically, right? We maybe haven't seen the end of all of this, but it could be moving up for different reasons than money being printed, right? We might be seeing more inflation because value in the dollar is being lost, because people are losing faith in the dollar, because the government has shown that they're going to just keep printing it. Maybe because the United States has massive national debt, sitting around $30 trillion at the moment. That's another potential reason why we could see big inflation, right? If other countries are unwilling to send us goods in exchange for dollars printed, which is pretty much how we've been sustaining ourselves. We'll take a peek real quick at the imports and exports of the U.S. At the trade deficit, really, that's what we're really looking at. We actually just posted a record trade deficit in 2021, and we did cover this in the video yesterday, right? The trade deficit increased in 2021 from 2020. It increased 27% to an all-time high of $859 billion. Now, the way this is being funded is by the government printing money. They're handing it out. They're taking out debt, and we're seeing a lot of additional goods flow into the country off of these huge cargo ships, right? We're buying stuff from China, we're buying stuff from Japan, we're buying raw materials from Africa, we're buying all kinds of stuff, and what we're producing in exchange is not nearly as valuable as what we're importing, right? We had a deficit of $676 billion the year prior, now we have $859 billion, and that deficit is the difference between what we export and what we import. We're importing dramatically more. And so it's likely that at some point this is going to catch up with us, right? That other countries are going to realize, hey, the United States, if you take a look at their national debt, which we can take a look at, their national debt right here, or our national debt, I should say, and other countries may have begun to notice that it's just perpetually increasing, going up and up and up and up and up, and that there's more debt now than ever before, and in fact, that every year, pretty much, at least since 1990, there has been more debt than ever before, that we just perpetually keep taking out debt. And these other countries might start to realize, what's the dollar really worth? I mean, is the United States government ever going to pay that money back, or are they just going to keep going deeper and deeper into debt? Probably we're just going to keep going deeper and deeper into debt unless we have some real policy changes, unless we actually start to do something about this trade deficit. We're probably just going to be going deeper and deeper into debt. And other countries probably don't want to be on the receiving end of that, right? They don't want to keep lending us money and sending us goods in exchange for what at the end of the day is nothing, right? We're just printing money, borrowing money, and sending them cash in exchange for real stuff, right? We're buying electronics, we're buying clothes, we're buying fabrics and everything that we use every day. We're buying computer parts, medicines, everything is coming from these other countries. And we do provide a bunch of services, right? We provide stuff like Microsoft Windows, we provide Netflix, we provide the Apple iOS App Store and all the apps that come on that, or most of them at least. And there is a lot of stuff that we do provide, but at the end of the day, those other countries are providing real physical stuff. And if push comes to shove, people in those other countries are going to have to decide if times do get bad, if we end up entering some kind of recession, they're going to have to decide if they want to send out real goods in exchange for virtual services like Netflix and Hulu and all of that. And they're really going to have to decide if they want to send out those real goods in exchange for debt, which is essentially what we've been using to finance all of our consumerism for the past while. So there is a real threat to the market. I will meet Kevin that, right? I will grant him that. There is probably some kind of threat to the market coming. But I don't think that his cash position is the right move, right? I don't think that moving all into cash is necessarily the right thing to do. I think that he's probably being a little bit too fearful of the catalysts that he's talking about, at least, right? He's worried about the Fed raising rates and fighting inflation too hard. I do not think that that's going to be a huge issue. I think the Fed realizes a couple of things. One, the Fed realizes, and specifically Jerome Powell realizes that he has done a couple of things to the stock market. He's done a couple of things to the economy in general as well. And we're going to take a picture of Jerome right here and pop it up. So Jerome has done a couple of things to the market, some good and some bad. During the pandemic, he certainly helped out when we were going through this massive crash, one of the sharpest crashes I think that we've ever seen. He certainly helped out the market. He helped it up. He swooped in at the last minute, started printing a ton of money, did quantitative easing, all kinds of stuff, and pumped the market up for years, or at least a year and some change, right? The market was soaring. It's still doing okay now. It's not like we've crashed off a cliff. Right now, we're not at all-time highs, but that's not always been the case, right? We've seen some gyrations in the market in the past. But Jerome certainly swooped in and saved the market. But he did not just do that, right? Jerome did something else also when he came in to save the market. He also succeeded in raising inflation, right? He did print out a lot of money. And like we were just looking at, he printed out quite a bit. And most of it went to the wealthy. 74% went to the richest 10%. And a lot of that went straight into the market. So he saved the market by doing that. But the rest of the money, the rest of it, the other 26%, went to the bottom 90% of people, right? If you do the reverse math on that, the bottom 90% of people got the other 26% of all of this money that was added to circulation. And that is succeeding in raising inflation, right? Those are the people who are spending. That's why you see used car prices skyrocketing, right? My used car I actually bought right before the pandemic started, and it's probably worth maybe double. I could maybe sell it for double at this point. I paid about $2,800. Maybe I could sell it for $5,000. And it's not a great car. I mean, the AC doesn't even work in it. I need to get that fixed. But it's not even a great car. So I was very lucky with that buy. I was very lucky that I didn't have to pay double for a cruddy car. But overall, we are seeing big increases in prices, mostly because of all this money printing. And the big increases in prices, a lot of people are expecting to be much, much larger than what they'll likely become because we have seen a lot of money printing. 80% in the past 22 months has been printed. And people are getting a little fed up, right? They're looking at this and they're saying, well, why haven't these prices really skyrocketed? A lot of people like Peter Schiff, who Meet Kevin actually just had on the show. He actually just had Peter Schiff on his show. I think we can pull up his channel right here. He literally just talked with Peter Schiff a couple of days ago. And I like Peter Schiff, right? I think Peter Schiff is right about a lot of stuff. He's probably going to be right in the end. But I think it could be a very long time before what Peter Schiff is saying actually comes to fruition. I think that the collapse of markets is probably a ways away. And there's no telling when it will actually be, right? It could happen tomorrow. I mean, at any point, these foreign countries could decide to stop sending us goods, to stop having a big trade imbalance. They could decide to stop sending us products in exchange for cash. And this trade deficit could go away because those countries don't want to do business with us anymore, right? If they notice that we're just printing, and buying, then these countries like China and like Japan, they might decide, well, the U.S. dollar, who cares about it, right? If the United States dollar loses its position as the world's reserve currency, then that could be very bad for us as well. And that would actually probably cause a massive crash, not just in the stock market, but in the country, right? We would see a real economic crash. People wouldn't have hardly anything, because if you think about it, most of the stuff that we use is getting produced in other countries. And if people all of a sudden don't want our money, then we've really got nothing to hand off in exchange for all of that stuff that they're handing us. And it's scary to see, and it's a distinct possibility that we could be looking at. But do I think it's going to happen anytime soon? Probably not, right? You can look at this chart, and at this point I've really mixed up my tabs here. So you can look at this chart wherever I put it, it's somewhere, of the debt in the United States. Here it is, the public debt of the United States from 1990 to 2021. I mean, people were probably looking at this in 1990, sitting at $3 trillion, and were very, very worried about what the national debt was. And then 10 years later in 2000, they probably looked at it and said, $5 trillion, that's completely unsustainable. We're in big trouble. There's really bad stuff coming down the pipeline. 10 years later, we're at 13 trillion. People are saying there's no way this can go on. It's completely unsustainable. We're in way too much debt. This is big trouble coming, and it's coming now. There's nothing we can do about this. And that's what Peter Schiff, I believe, was saying in 2008 and 2009 during the recession. He was saying that we're going to have the collapse of the dollar and stuff even back then. Now, a decade later, more than a decade later, we're at 30 trillion of debt, and people are saying the same stuff. It's unsustainable. We're not going to have any more growth. We're looking at a really bleak future. But at the end of the day, what's really keeping this whole thing going, what's really keeping this show on the road, is the fact that people still believe in the dollar, that people still want the dollar. And that's a psychological thing, right? We can't just, maybe we could just print enough money so that people completely lose faith in the dollar, but I don't think that's likely to happen anytime soon. The dollar has been around for quite a while. It might happen in the near future. Maybe people will lose faith in it. But what's really keeping us going is the fact that people do have a lot of faith in the dollar. They don't think that the dollar is going anywhere anytime soon. And at the end of the day, everyone really wants dollars. When you see people in movies sitting in their piles of wealth, it's usually they're sitting in a vault surrounded by dollars. They used to be surrounded by gold in the old movies. Now they're surrounded by dollars. That's what the thieves are always stealing. That's what they've got in all of the newish TV shows. And that really talks about the psychology of what people are thinking, right? People, regardless of how many dollars seem to be printed, still really want dollars. They still really value them, both in the United States and other countries. And I think that that's not too likely to change anytime soon. I think we're still going to see people wanting dollars to some extent. Some people, of course, are realizing that we have printed a ton of money and that dollars are a little bit less valuable. And those people are typically buying up assets, right? They're buying up assets like gold, silver, cryptos, stocks as well. You can see that's why stocks have been moving up dramatically. A lot of people, including myself, do not want to have too many dollars, realizing that at any point this house of cards could come tumbling down. I would much rather have stocks in my portfolio. And looking at this, it's been a good bet to make over the past couple of years. Even during massive crashes, the Fed has shown they're just going to print more money. They're going to print more money and skyrocket the stock market. So we're looking at good stuff overall in the near future. I think that we're probably going to see much higher stock prices in the future than what we're currently looking at. And for a couple of reasons. One, not only are people worried about dollars moving down in value, people are also thinking that stocks, well, people aren't thinking this necessarily, but this is the reality of what's going on in the background. Stocks, when the rich got all of that money in 2020, 2021, when all of that money came into existence, 80% of US dollars printed in the last 22 months, when all of that came into existence, and people got it, most of it went to the rich, right? We've already established that. 74% went to the richest 10%. I honestly haven't fact-checked this guy, Dan Price, but let's just take his word for it. It seems like a believable thing in the United States that most of the money would go to the ultra wealthy. So let's assume that's true, right? If most of it goes to the ultra wealthy, which it probably did if you look at what happened to the stock market, we saw massive increases in the stock market of over 100% gains from the lows to the highs over the past years. The SPY moved up from the lows of the pandemic up 111%, 113% maybe, from the lows of the pandemic to the highs of what we saw just earlier this month. I think that something people aren't often taking into account is that when the rich spent that money buying up all of these stocks, they didn't burn that cash. They didn't destroy that cash. They transacted in that cash. They used that cash to buy up stocks, and they handed it to somebody else who was selling them stocks. So they basically just traded that money back and forth and did not destroy it. It's still in existence, right? Those dollars have not ceased to exist just because people went through the first round of buying up stocks. The people who were buying those stocks now hold shares. The people who sold those stocks now hold a bit more cash than they once did, and now they have the cash to buy whatever they want with. And if they see stocks continuing to rise like they have for the past couple of years, they might eventually realize that, ooh, I made a mistake. I shouldn't have sold all my stocks. I should buy back in. And maybe they'll be buying in on these dips. And potentially, that's a reason why we've not seen a big dip in the stock market since the pandemic started and since all of that cash came into circulation, because there's just so much more cash in the system trading hands between these wealthy individuals who are making big buys and sometimes big sells in the stock market. There's just so much more cash that the innate value of these stocks in terms of cash has probably moved up dramatically. When you print that much money, what do you expect to happen to stock prices? Well, I would expect them to move up, and to move up in a big way, and not just temporarily, but permanently. I think that we're going to see much higher prices on stocks because we have so much more cash in the system, and so many individuals have become flush with cash. I mean, that cash, it's going somewhere. It's always somewhere. It doesn't matter if it all went to me and I bought stocks with it. It's going to somebody else as soon as I buy those stocks, right? On every trade, there's someone buying as well as someone selling, and the person selling is getting cash in exchange. And if they're selling stocks, they're probably interested in the stock market to some extent, right? They've had stocks before. They probably have a bunch of stocks to sell, and they probably want to buy stocks again at some point. So we're probably going to keep seeing a cycle of these stocks moving up and up and up, is my expectation, right? That's what I'm thinking we'll probably see in the stock market, why I'm still pretty bullish on it, and why I think Kevin might be making a little bit of a mistake selling all of his stocks and going purely into cash, right? But the thing to remember is he sold all his stocks to people. Now people have those shares. He has that cash, and at some point, he's going to want to buy back into the market. Maybe he's going to wait until there's a real catastrophe and the stock market is down below where he bought in. Maybe he's just going to FOMO in at some point. He has been known to change his mind. But it's my suspicion that he will be buying back in at some point, right? And potentially sooner rather than later. I don't know. He's really made a big deal about all of this selling, but I think that at the end of the day, he might turn back to his original psychology of money, is buy the dip. One last thing that I did want to talk about regarding Kevin was the fact that his psychology of money kind of changed. Now, I'm not pretending that I was in his course or anything, right? I didn't buy his course, his Psychology of Money course, but he would talk about it in his videos from time to time. And he would always talk about buying the dip, and you always want to increase your share count. And it really was, I think, in a lot of people's minds, a complete 180. And don't get me wrong, I'm a big fan of Kevin. I love Kevin. My personal net worth is much higher than it otherwise would have been without Kevin. I think that he's been a great influence and a great source of information, and I plan to continue watching him to whatever extent he continues to post videos. But I think that he really did a complete 180 and kind of fell out of his own psychology of money as he saw his net worth potentially decreasing by maybe $10 million over the course of a couple of months. I think that really shook him, that he saw everything he had built. Maybe he had a net worth of 30 million and he might have seen it sink to around 20, I think is what he said. That could really shake a person when you see 30% or 33% of everything that you've built over the course of your whole life shrink away in just a couple of days or a couple of weeks. And surely he's going to make some decisions about that. Now, do I think he made the right decision selling pretty much everything? Probably not. I think he probably deserves to go a little bit heavier on cash if he's worried about his own personal financial security in the short to midterm, I think it makes sense. Yeah, have some cash. Put some cash in a high interest savings account. Maybe use Yoda Bank if you're interested in that. And then you can have some security, but you can still be invested in the market, because overall the markets have shown that they do tend to go up over time. And I will show you guys what's happening with Kevin's current portfolio right here. And it's something that a lot of people don't take into account. So this is what's happening with Kevin's portfolio this instant. You can actually see it. And it is not good, because over the long term, this is the historical trend that Kevin's portfolio is on. And this is a chart of the purchasing power of $1 in every year from 1935, or from 1635 to 2020. So over the past couple hundred years, this is what's happened to the value of the dollar. And you can see that it has just been decimated. And Kevin, sitting all in cash, well, what's he really hoping to gain over this long-term trend, right? There have been some periods, over 100 years ago, where, or maybe about 100 years ago, where the value of the dollar has not quite even doubled, right? It hasn't even doubled, but it does perpetually lose more than half of its value over time, and quite frequently, right? We started pretty darn high up there. $1 today was worth $76 in 1963. So we've gone down by 73x. So scary stuff to see that this is currently what's happening to Kevin's portfolio the longer he sits in cash. And maybe he's going to get lucky. Maybe he's going to get really lucky, and the value of the dollar will spike, because we might see a big crash in dollars. But with all of these extra dollars being printed, I don't think that's going to be the case. I think that people want to hold other types of assets. They don't want to have too many dollars. And the circulation of dollars, right? These dollars changing hands is what's allowing all of these other assets, like cryptos, like Bitcoin, to move up dramatically in value, because maybe people holding stocks before all of this money got printed, maybe they got some cash on their hands, maybe their friends got some cash on their hands, and those people then decided, hey, let me buy up some stocks from you, right? They traded their stocks for cash, they had extra cash on their hands, and then they're free to go buy whatever assets they like. Maybe they liked Bitcoin more, and we saw Bitcoin move up. Now whoever sold that Bitcoin has some extra cash on their hands. They can go buy up stocks if they like the look of stocks more, or they can buy up real estate, or they could buy up gold or silver, some of the biggest assets in the world, right? Gold sitting at 11.6 trillion. And I think that we're just in a cycle at this point of so much money having been printed that we're probably not going to see the end of this bull market anytime soon. I think that there's so much cash in circulation that every time there is a dip, it does tend to get bought up. We just saw it, and I'm not saying that 100% we're going to crash, right? I'm not saying that we're definitely going to move down or move up, right? I'm not saying that we're guaranteed to rise. I don't know any more than you guys do, right? I don't know any more than you guys do. I don't know any more than Kevin does. This is just my suspicion, and I'm explaining my opinions and my reasoning for thinking what I think. I think that there's too much cash out there, and so we probably won't see a crash. But maybe for some seemingly, to me, illogical reason, maybe we'll see the value of cash improve. Maybe people will want more dollars. Maybe stocks will tank because everyone just wants to get a bunch of cash in their accounts for whatever reason. And maybe the Fed won't step in then, and we could move down. It's not an impossible situation. So I'm not trying to convince anyone to go all in on the markets. I'm not trying to convince anyone to dump all of their cash and burn it all, because I'm not even doing that myself, right? I like to have a diversified portfolio. I like to have some cash. I like to have some stocks. I like to have some crypto. I like to have some precious metals. And I'm looking at moving into real estate as well. So I think that there is something to be said for having a diversified portfolio and being ready for anything. I think that that's really important. And I don't think that at this moment Kevin's ready for anything. I think he's really betting on his cash position really panning out. And I don't know if that's going to be the case. It does worry me a little bit to see him going so heavy in cash. It makes me worried that he's maybe lost his way a little bit. And I would really like to see some of the people from Millennial Money coming in, helping him out, and maybe giving him some advice, having a real sit down with him, not on camera, just talking to him off camera, because potentially there's something going on in the background with Kevin. Who knows what's going on with Kevin in his personal life that's making him, kind of stressed out about the markets. Who knows what's going on? But I do think he probably needs some kind of guidance. And maybe he's just gone a different way, right? Maybe he's just decided that the markets are going to turn bearish no matter what, and that's his choice to make, right? If he thinks that, then he can certainly make that move. But I just wanted to explain to you guys my thoughts on the situation, why I'm not as big of a fan of just going purely in one thing, right? I never think, unless you have some kind of insider information, in which case you probably shouldn't act on it, that you should go all in on something. And that includes cash. I don't think you should go all in on cash. And this is just my opinion. I don't think you should go all in on cash. I don't think you should go all in on especially any one stock. If you are going to go all in on stocks, or at least mostly in on stocks, then maybe you should, diversify it a little bit. At least do that. But I don't think you should go all in on crypto or anything like that, because that really improves your chances of achieving total ruin, right? You could actually lose it all. You could lose everything on one big bet if you're making a massive bet with your entire net worth. And I think that's what Kevin's doing to some extent now. I will say it's a pretty safe bet. It's unlikely that his $20 million is going to decrease in value to the extent that he's poor, right? That would be really dramatic. We would have to be seeing excessive hyperinflation for that to be the case. So he's pretty safe sitting in all cash. His psychology is certainly much safer than, looking at the stock market fluctuations of losing maybe a couple $1 million a week or gaining a couple $1 million a week. That can really mess with your head. I could understand that. So for Kevin, maybe the right decision is to go cash heavy at this time, so he can take a little bit of a breather and have some time to really think things through, to decide what he thinks the markets are actually going to do. Now, he's probably not liking this right now, right? Because the S&P is actually moving up. We're moving up on the S&P. We're up 1%, 1.17%. The Russell's is doing pretty good as well. It's up more than the S&P. And the tech-heavy stocks are also up. And some of our favorite stocks, we'll take a peek, are doing pretty good. Sundial, it looks like, is using the 53-cent level as support. Looks like they moved down just a touch. But Sundial, for those of you who are interested, just got their extension granted. We are going to talk and slowly transition into this more Sundial-heavy news. So for those of you who don't know, Sundial is a Canadian cannabis company that has had a meme stock-driven, cannabis legalization-driven squeeze in the past. Went up to almost $4. Well, actually higher than $4 at one point. It was up at $4.87, I believe, at its highs. And it's done some pretty impressive stuff in the past. Now it's been beaten down quite a bit. And people have become very fearful of this stock. And I've been buying it. I think that this stock has the potential, if we get legalization in the US at some point, to run pretty far and pretty hard. And one reason why they're up today is because since they were trading under $1, they were at risk of delisting. And they were actually going to delist at some point in the next 2 or 3 days, until they got this big catalyst coming out for them, that they were granted a 180-day extension by the NASDAQ. So they now have 180 extra days, about 6 months, to regain compliance with the NASDAQ. And there are some huge catalysts that I think are coming for this stock. Now, I'm not trying to convince anyone to buy it. I'm just going to let you guys know some of the catalysts, some of what I think is going on with Sundial. But one really big thing for Sundial that I think could pump them up, as well as obviously all cannabis companies, is U.S. legalization. Now, we have actually seen a massive push for U.S. cannabis legalization this year, and we're probably, in my opinion, going to see an even more massive push towards November, when we're going to see the midterm elections. And we can look at some of those statistics pretty soon. But as of what we've got right now, Chuck Schumer, Senate Majority Leader, plans to file a cannabis legalization bill in April, as top House lawmakers detail their own plan reforms, okay? So we've got Chuck Schumer talking about legalization. We've also got Nancy Mace, a Republican from South Carolina, and she has been endorsed by Amazon. Her plan has been endorsed by Amazon to end the 85-year prohibition of cannabis. So Amazon is actually on the side of Nancy Mace. One of the biggest companies in the world is endorsing cannabis legalization, and that's when you can start to see really big moves in policy, right? When big companies start to throw their weight around, when Amazon starts to condone and endorse the legalization of cannabis, that's when we might actually start to see some real progress, and we might start to see it happening really fast, is my hope. That would be incredible stuff, right? Either Nancy Mace's plan goes through, maybe it's Chuck Schumer's plan that goes through, but I think that we could and probably have a very high chance of seeing legalization at some point. And if you look at this, if you look at this breakdown of Congress by party, we can look at the House first of all. 212 Republicans, 222 Democrats. All right. If you look at that, and then I believe it's this right now. That's not the one. It might be. Here we go. No, this isn't the one. Let me find this real quick. We've got a breakdown of Congress, and it's basically 50-50, right? Basically, half of the Senate is Republicans, half are Democrats, and we probably won't find that story that I'm talking about. But the fact of the matter is, we're probably going to see a big push from both Republicans and Democrats to get legalization going at some point in 2022. And the reason being, both sides know that this is going to be a tight race. Most people are probably expecting a very close race. It was a very close race last time. It's going to be a very close race this time probably, and everyone's going to do everything they can to get people on their side. Now, something they can do is cannabis legalization, right? Americans overwhelmingly say cannabis should be legal for recreational or medical use. And looking at this chart we got right here, 60% of people say, regardless of party, that cannabis should be legal for medical and recreational use. So just complete legalization. 31% say it should be legal for medical use only. 8% say it should not be legal, and 1% refuse to answer. So if you can gain the support of 91% of voters on a specific issue, if either the Republicans or the Democrats can do that, they're going to have a much better chance at beating out the competition. They can probably win over some of the middle. They can pull some people over who might not otherwise have been willing to vote for them. So if either Nancy Mace's plan gets approved or Chuck Schumer's, it doesn't really matter, right? What matters is that Republicans and Democrats both want cannabis legalization. That's what's going to matter to voters most likely. Then we're likely to see it, in my opinion, right? I think that since Americans overwhelmingly want it, and they have wanted it for a long time, since we've got big companies, massive companies, some of the largest in the world, like Amazon, publicly endorsing this plan. And I will point out that Amazon is the 6th largest asset in the entire world, okay? It's the 6th largest asset in the entire world, the 4th largest American company, right behind Apple, Microsoft, and Google. It's the 6th largest asset in the world. So if they don't have enough sway to get this legalized, I don't know who does. I mean, they outrank pretty much everybody, unless Microsoft decides to go against it and decides, we don't want cannabis legalization, which I don't think they have any reason to do. Then we're probably going to see a lot of pressure coming from big business to get cannabis legalized, and probably they'll garner a lot of support, is my expectation. So I'm thinking that we'll see some really great catalysts coming down the pipeline for Sundial stock, ticker symbol SNDL. Once again, not financial advice, not trying to convince anyone to buy it or to sell it or to do anything with it. I'm just letting you guys know what I'm thinking about the stock, why I like it, and why I've been buying it up lately. So hopefully, oh yeah, so Hakuzu said, Meet Kevin made this mood to sell courses. He will only stream for that. Oh, this move. Yeah. So I will say that Kevin in this video did say that he's ending his morning live streams and whatnot, and that he is moving them to just his, I don't think it's his channel members even. I think it's just his course members, right, for his private investment group and whatnot. So maybe he is making this move to become a little bit more private, and maybe that will be a good move for him. Yeah, I mean, that could be. Like I said, I'm a big fan of Kevin. I hope that he continues making videos to some extent, because they were always, in my opinion, a great source of information. And he has a team working behind him. It's not like he's just doing all of this himself, right? This is a team of people helping him research, helping him figure out what's going on in the market. So it is a very valuable asset, in my opinion, Meet Kevin's channel. He has a lot of people. He has access to a lot of people like Peter Schiff. He can do interviews with them. And, I think that Kevin definitely has a lot of resources and has been able to provide a tremendous amount of value. And to me as well, right? I hope that Kevin has a great success in the future. I don't think he's going to have massive success with this, all cash position that he's in. But that's just my opinion, right? I could be wrong just as easily as Kevin could be wrong. And at the end of the day, what's important to realize, guys, is that nobody actually knows what's going to happen in the stock market unless you have inside information. And I don't think Kevin does. I certainly don't. And, our guesses as to what's going to happen are probably as good as yours, right? There's no resource that we have access to that you guys don't have access to. The only difference might be, how much time people spend looking into the stock market and how much time they spend researching stuff. Kevin certainly has a big team behind him and can research quite a bit. But I will say he's almost fallen into this point into the camp of these perma bears, it seems, and maybe not just a perma bear, but he's certainly fallen into the trap, I think, of maybe confirmation bias, where he all of a sudden thinks that stocks are going down, and as soon as he clicked that sell button, as soon as he made that decision to sell all of his stocks, I think that it was potentially something that was going to perpetually make him want to sell stocks more and more, right? The more pressure that he puts on himself to have stocks moving down in order to make money, the more he's going to look for reasons why stocks are going to move down. So he certainly put a lot of pressure on himself when he decided to sell out of his stocks, when he decided to get rid of most of his portfolio. He definitely put a lot of pressure on himself because that was a big move to make, and he put way more pressure on himself than most people would be putting on themselves if they sold, not only because he has so much more cash than most people and so much more value in his account, but also because he is a huge public figure. He has 1.8 million subscribers on YouTube. His videos get hundreds of thousands of views sometimes, and a lot of people look up to him for financial wisdom, and that certainly has to take a toll on his psychology, right? He does not want to be wrong. Now, I'll be the first to admit, I'm wrong all the time. I'm surprised to see how cheap Sundial has gotten. I'm surprised that Sundial has been able to get down this low. I'm wrong all the time. I'm not pretending to be right here. Overall, I think I will be right, but once again, I'm making sure to disclose that that's just my opinion. I don't know for sure, and I certainly can't tell the future, guys. So, Kevin, he obviously says, not financial advice, but I think that something might happen to your head when you get 1.8 million people looking up to you and talking you up in the comment section of your live streams every day. I think that something might happen. Right now, we've got, 160 people watching? I'm not, I don't feel like I'm in Kevin's shoes at this point, right? I don't have millions of people or even hundreds of thousands of people pumping me up, talking me up, making me think that I'm maybe right when I'm not, and giving me a little bit of confirmation bias, saying I'm making the right choice, thank you for the info, and making moves with me, right? I've got, there's some people watching, but it's not nearly as many as Kevin's got. And I think that something probably happens when you get that many people supporting you. And some people have been able to avoid it, right? Joe Rogan, I think, has done a really great job of avoiding the power almost. Not the power necessarily, but just the influence and the hype getting to his head. I think he's done a really good job of somewhat ignoring it. But even him, right? Even he is probably affected by it to some extent. And Kevin has certainly been affected by it because if you look back at his videos over the past while, well, there's so many we probably can't get back that far, but he has in the past posted videos that did not get nearly this many views. And all of a sudden he came into great success and great wealth rather rapidly. And it's completely understandable that that has gotten to his head to some extent. And that's one of the reasons why I think he's really gung-ho about the market moving down and having Peter Schiff on the show and selling all of his stocks. Why I think he's maybe a little bit too gung-ho about it. Why I think he's not willing even to diversify a little bit, to buy up maybe 25% of his portfolio, to put that in the stock market. I think that might make some sense. Maybe he wants to put 10% into crypto if he's really worried about inflation. Maybe then wants to put 30% into precious metals and other inflationary hedges like that. And then hold some cash. I think he's just really gung-ho on this cash position, and it might be a bit of a mistake, in my opinion. I think it's a little bit too heavy on cash, a little bit too concentrated into one specific thing, and we'll see what happens, right? He might look back at this in a couple of years and decide, oh, I didn't know what I was talking about. Similar to how he might look back at what he was saying a year ago about inflation being transitory and how we were probably going to see deflation and how all these tech stocks were going to move up. He was saying that a year ago, and So far, inflation has continued to persist. And I'm not trying to bash Kevin, right? I love Kevin, but I'm just pointing out that nobody is right 100% of the time. I'm not right 100% of the time. Kevin's not right 100% of the time. A year ago, I was saying that we would probably be seeing much higher inflation than we are. And now I'm changing my tune a little bit, right? I think we'll probably see some significant inflation. It'll probably continue to rise, in my opinion, but I don't think it's going to be as dramatic as I once did. And this is only after, learning more about what actually happened with all the cash that went into circulation and just spending more time in the markets, right? Thinking more about what have we seen in the past with markets, right? What have we seen in the past in terms of the value of the dollar? Well, we've typically seen it go down dramatically, and we've definitely been increasing the national debt for many, 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 many years. So just because the national debt has been on the rise, and just because it's still on the rise, and just because we've had a trade deficit for a very long time, doesn't mean that the bubble, as people like to call it, is about to pop today. It might not be about to pop tomorrow. People have been calling for the pop of this bubble for decades, and we've yet to see it. So at the current moment, I am planning to, and to bring in a trade return here, I'm planning to trade the trend, right? If you look at the stock market and you notice that we are perpetually rising and rising and rising, at least for the past decade, I would be pretty foolish to think that I could catch the top. And even if I do catch the top, what we've seen in the past is maybe a 50% drop, right? Maybe it's a 50% drop. Worst case scenario, typically, right? If you're in some safer stocks, if you're diversified. Well, once again, not going to put all of my money into the stock market. I definitely want to have some cash on the sidelines. I definitely want to have some other assets like cryptos and precious metals. But I definitely don't want to miss out on the gains that we could potentially be seeing over the next 10 years, which over the past 10 years, if you look at 2012, the beginning of that to where we are currently, was a 219% gain on the SPY. And those aren't even the riskiest of riskiest stocks. We've seen a massive gain, much more than you would have lost if things went down 50%. So overall, I'm not too worried about the stock market moving down. I think that we're probably going to have some good times ahead of us, especially for smaller market cap stocks. Let me show you this statistic real quick. We are about to end the stream at 10. That is typically when we end it, but let me show you this statistic for some stocks, right? Here we go. Scary statistic right here, but actually, at the same time, a very hopeful statistic for a lot of these smaller market cap companies. More than 1/3 of NASDAQ stocks have slumped 50% or more. And this wasn't even at the pit of where we were just a week or two ago. This was January 14th. We were on the decline with the S&P, but we still certainly had some more room to move down, right? That was that day right here that this report came out. We certainly moved down further in the S&P by quite a bit, by about $40 in the S&P, about 10% down. And that was when more than 1/3 of NASDAQ stocks had slumped 50% or more from their highs. I think that at that point, when we actually hit the pit in the S&P, it was probably closer to 50% of NASDAQ stocks had slumped 50% or more. So there has been massive pain in the market over the past couple of months. And I think that that massive pain could at some point reverse itself, especially in these smaller market cap stocks. If you're looking at stocks that are in the Russells, the smaller market cap ones in particular, you can see that 2021 was not a great year for them. They were pretty stagnant over the course of that year, and we've actually hit lows. We hit lows this year that were lower than what we hit during all of 2021 for the Russells. So I think that we've probably got some significant room to grow on a lot of these stocks, Sundial being one of them. I know a lot of people are calling out Sundial in the chat. Sundial being one of them, it's up 11% today. We're getting close to making highs of day. It's up to almost 56 cents per share. So I'm really looking forward to seeing what happens with Sundial stock, as well as many other small market cap stocks in the near future. So look at that. We just made highs a day on Sundial, and what better way than that to end the stream. So thank you guys for joining us. Feel free to hit the like button. That is much appreciated if you want to do that. Keep in mind, we've also got a Rumble channel if you want to check that out. And we do these morning market live streams every morning, starting at 9, going to 10. So it's just about an hour of talking about what's going on in the markets and any interesting current events going on, such as Meet Kevin ending his channel and whatnot. So thank you guys for joining us. Have Have a good day. To everyone who joined us for the first time, feel free to subscribe to the channel. That would be much appreciated. And other than that, have a great rest of your day. We'll see you tomorrow in the live stream, hopefully. Bye, guys.